In this presentation, we will continue on with our comprehensive problem. We will now be recording the purchase of supplies on account. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So when we think about this term on account, we need to note that obviously in practice we would know exactly what's happening. We're purchasing supplies, in this case not for cash, but with an IOU, possibly a credit card or something like that. In a book problem, however, we got to say that in some simplified way. Some books will say on credit, but sometimes they avoid that because we get mixed up the term debits and credits and then credit cards and buying something on credit. So it may say on account. Whatever the term is, we need to get used to it. It might say on credit, on account. What that means is we purchased supplies and we didn't pay cash. And the default for us not paying cash is we bought some kind of liability, which for us is going to be accounts payable. So if we go through our thought process, then we're going to say, is cash affected? And we're going to say, no, we purchased it on account. And then we want to think then, I would think then, what did we get? We got supplies. Now supplies, if we look at a trial balance, which I always recommend having, you'll notice there's an asset of supplies on this one, and there's an expense of supplies here. And that's typically the case, especially with book problems again. And you may ask, well, why is there a supplies on an asset and the expense? And from an accrual standpoint, from a perfectly accrual standpoint, when we buy supplies, we haven't used them yet. And therefore, just like when we bought the equipment, we should put it on the books as an asset, and then we record the use of them as we use them, like we would kind of in inventory. Supplies is really an introduction to how we'll be dealing with inventory flows. Now notice in practice, of course, if our supplies are very small, if we're talking about paper clips, we might be using paper clips for another year or so. We're probably still just going to expense the paper clips because it's not worth us going through the process of putting them up here and then counting them. So we'll just expense it. But if it's significant supplies, we should be recording it, tracking it, and to practice the accrual method, we'll do that as well. It's also a great introduction to inventory. So that means that we're purchasing an asset here. So here's what we got. Assets all have debit balances. We need to make it go up. We got more supplies. So we're going to do the same thing to it, another debit. So I'm going to copy supplies in L7 by right-clicking and copy. We'll put that up top of our journal entry in C18, right-click and paste, 1, 2, 3. Then the amount is going to be in D18 of the supplies that we purchased here, 16,000. So that seems like a lot of supplies. So we're probably do indeed want to put it on the balance sheet and then count them and make sure that there's no theft and that kind of stuff. So then we're going to say negative of this number. We could put a negative 16,000 for the credits. I like to use that little formula. So negative instead of equal, and just point to that 16 to pick up that number and flip the sign. Then we need to record what the credit will be for. We know that the good thing, cash, is not going down because we didn't pay cash. Rather than this credit bringing down cash, it's going to increase the bad thing, the liabilities. So it's going to increase accounts payable. So remember that accounts payable, the reason we think of supplies first is because accounts payable probably is what we knew we were going to use in this journal entry. But because we don't see it as often as asset type accounts, we may not know how to increase it as easily. And remember, it has a credit balance. So to make it go up, we're going to do the same thing to it, a credit. So we'll copy the accounts payable. We'll put that on the bottom in C19, right-click and paste 1, 2, 3. I'm going to indent that, which is probably done for you already in the Home tab, Alignment Group Indentation. Also note that as we record some of these initial entries, you may start to think that, well, hey, credits are good, and debits are good, assets going up with debits, and credits are bad, assets going down or liabilities going up with credits. Note that that's not the case because that only happens to be the case with the assets and liabilities or the balance sheet accounts. The equity accounts, we like the credits, really. Credits mean that we owe the owner money. At least if we're the owner, we like the credits. And then on the income statement, the credits are good too because revenue is a credit and the expenses, what we don't like, are debits. So just note that you can't really say if you start getting into the habit of saying debits are good and credits are bad or vice versa, then you really want to not get into that thought process, because it'll probably cause more problems that you'll have to unlearn down the way. Okay, so we're going to post this now. Remember that there's multiple ways you can post it. You could make this small and try to see the whole GL. I'm not going to do that. What I'm going to do is freeze the panes. So to do that, we'll scroll up to the top. I want to see as much of the right as possible. I'm going to select this little arrow just so I get rid of that A column. So B is flush. Put our cursor on K1, go to the View tab, and go to the Windows groups, and then we freeze the pane. Freeze the pane. Then if we go to the right, B through E is frozen, which is really pretty neat. Okay, so then we're going to scroll down and we're going to record these. So here's the supplies in row 18. Here's the supplies on the trial balance. It's going to be in the same order when we go to the GL. So if we go to the GL, here's supplies. That's the one we want. So here's supplies. This is on the debit. We're on the debit side of supplies. We're in cell S16, where we will say equals, point to that supplies, and enter. So that brings the 0 up by 16 to 16. If we say, okay, what happened to our trial balance? If we go back to the trial balance, what happened? This one. If we go back to the trial balance, we'll see that that 16 is here as well. So there's the 16. We're out of balance, of course, by the 16 until we record the other side, the liability. So I'm going to get rid of these. We'll go to the liability. That's our first, payables is our first liability account. Same order on the general ledger. Scrolling to the right, we've got our assets. Then we've got our liability. So we're down here. We want to be on the credit side this time. So we're in X21, where we will say equals, point to that 16,000, bringing the 0 balance up by 16 in the credit direction to 16. So then we're going to say, okay, that is going to be used to make the trial balance. I'm going to click just to the left side of the frozen panes and then go right one time. It'll pop back over. And there we are. There's the 16,000 there. We're back in balance. So the effect of this transaction is that we got supplies, an asset, not an expense, because we haven't yet consumed it, we haven't yet used it, therefore can't expense it in accordance with the accrual matching principle. And we increased the liability rather than decreasing cash, meaning, of course, that we owe something in the future. We owe the payment in the future. No effect on net income. We could see the accounted equation, assets equal now these liabilities plus all of equity. We could see that of these assets, 116,000, who has claim to them? 16,000 are claimed by a creditor, by someone we owe, and the rest of it, added up to the 116, is claimed by our owners in 40, 50, and 10, respectively, between Smith, Jones, and Brown. For more accounting information and accounting courses, visit our website at accountinginstruction.info.